Hello everybody, I'm Mortgage Mike and welcome to your weekly mortgage industry update. Today's topic is on the tide is a-changin'. I want to look at how FHA and conventional mortgages stack up in the marketplace and what we're going to see in the future in regards to both of the programs. So a little historical setting. Post-mortgage industry meltdown several years ago, we saw conventional tighten their underwriting guidelines relatively quickly. More importantly, what we saw was the mortgage insurance companies that insure conventional mortgages tighten their guidelines even faster and even tighter than what we've seen anybody else do. Now, what did that do? Well, that forced most of our clients to then begin looking at FHA as really a viable mortgage option. And in fact, over the last several years, FHA has accounted for 65% of the mortgages that have been originated in this country. And again, Texas is the #1 state for FHA mortgages. So you can imagine we've done a lot of FHA business. Well, now that the recession has somewhat stabilized, the country seems to be coming out of it and housing is stabilized, we're beginning to see the conventional guidelines, especially in regards to mortgage insurance companies, lighten once again. They have put a bunch of good loans on their books now, and they're beginning to lighten their underwriting guidelines and also their costs, because they're starting to do risk-based pricing in the mortgage insurance arena based on your credit score. So we're seeing loosening of credit guidelines, we're seeing a decrease in the cost of mortgage insurance, which is helping to increase the amount of conventional business that is being written out there today. Now, what's happening in the FHA arena? Well, FHA is finally beginning to tighten up. They haven't made any huge tightening in regards to the underwriting guidelines, but the first thing that they've begun to do is increase the cost of financing, and they do that through their upfront mortgage insurance premium or through their monthly mortgage insurance. Now, FHA has increased their monthly mortgage insurance premium for the second time in a year by 25 basis points. We are now at 115 basis points of the loan amount for the monthly mortgage insurance amount of the payment. So what does that mean from a conventional versus a FHA payment scenario? Well, it now means, depending on your credit score, that the cost of financing for an FHA loan has risen versus a conventional loan with MI. And I mean that from a PITI standpoint. The payment for an FHA loan, if you have a really good FICO score borrower, is going to be higher than it is for a conventional loan. So the increase in the FHA MI premium is in effect last week. What does that mean to us as we're selling homes or making mortgages? Well, what it tells me is this. Number one, I'm going to see more conventional business over the course of this year. You will as well. But more importantly, what I'm looking at is, what is it that's going to cause me to go FHA versus conventional? And it's the two C's. It's credit scores and cash. Credit scores, if you have a credit score below 680 or 660, you're going to find a situation where, one, mortgage insurance is going to be more expensive. Two, and that's a private mortgage insurance, by the way, or two, if it's below 660, you're not going to get a mortgage because a mortgage insurance company isn't going to insure the loan. So that's the first reason why I'd be going FHA. The second reason is cash. If we are limited on cash, FHA still allows us to do 6% seller contributions. So when we're doing a 3.5% down payment, and that's all the money we have, we're going to need that 6% contribution to help in regards to closing cost of prepaid items. Remember, conventional caps us at 3% at a 95 or a 93% loan to value. So I'm Mortgage Mike saying thanks for watching. Good luck out there selling real estate, and spread the love, heal the world. Talk to you soon.